Once more, my name is Leo, and I will be showing you guys how to enter trades into the money scanner, how to navigate it, how to get your way around it. So whilst you're learning, you can potentially be earning at the same time. All right. Now let's get it rock and rolling. Just so I know, because we always have so many people joining our blessed family, right? I just want to see how many people that they just new. So if you've been here less than 2 weeks, right, or let's say a month at least, just drop a number two, just so I know who's really, really, really new. All right, just so I see how basic should I really go into this training to make sure everyone's catch up, right? Everyone's catch up and everyone is on the same level. Okay. If you are new, don't worry. This is your journey is starting. Okay, so be very patient with yourself. You're learning something new, so it's very normal that you have some questions. Very normal that you will start slow. It's very normal. So all I say, be patient with yourself, right? And just keep rocking. It's just trading is a skill that's just a matter of time, really, right? You get used to it. It becomes routine once you get used to it. It's the same thing that when you start a new job, you might know a little bit about it, or even sometimes nothing, right? And it takes you a while to get used to it. But once you get used to it, it's just like a routine. And forex trading is a skill like no other, right? So be patient with yourself. We welcome you guys once more into our Wealthier World family. We're here to empower others to empower others. All right. Now let's get this started. Okay. Let me just share my screen. All right. Let me just share my screen. Let's get this rocking. Okay. I've got some stuff to really show you guys today that can help everyone level up. All right. Let me just share my screen again. Now, at the start of the call, I left these notes on the screen. I hope everyone wrote it down. If you have already, if you came to the previous training, you probably have it already noted down. If you have the Wealthier World launch document, it's pretty much the same, the money scanner for basic rules. All right. But if you are new, make sure that you have it written down because we're going to go through that. What is a Harmonic scanner? If you are new, if you never had contact with it, it's normal, but it's a tool that you should try to get to know as much because it's one of the tools that comes with your monthly subscription, that comes with your package already, right? Now, uh, to get access to the scanner, all you have to do, these are mostly for the newbies, right? All you have to do, because most of the you guys should know already, to access the scanner, right? All you have to do is log into your im.center, okay? You log into your im.center, then you'll see the menu here on the side, on the left-hand side. And what you want to do, so you want to come here to the strategies, all right? When you come to the strategies, this window will come up, all right? And it will basically be showing you the different strategies, different tools that the platform have to help you to know when to buy, when to sell, so you can possibly be profiting, basically earning whilst you learn, right? This is basically to assist you. And there's many many different tools, right? Many different things that can help you, different strategies for different people, right? Because that's one thing about trading is it will depend of person to person, right? I'm someone that likes to that kind of, let's say, more patient. Someone might be less patient, right? There's products for every type of personality, right? But the one that we're going to focus on today is harmonics, okay, which is here. So what you want to do is click harmonics, then the big one will pop up here. When you click it, the scanner will come up, right? It will open on a new window. So the harmonic scanner is one of the tools that comes with your package, like I said, and it scans the entire market for you. It finds the best points of entry and exit and gives you all the coordinates, all the price. So all basically that you would have to do is come here, copy and paste the coordinates that the scanner already found out for you, and just copy and paste and possibly profit. Okay, this is a 2.2 I think million software, right? That even the banks use it. So this scanners here is all about like probability. So whilst you learn, you can possibly be earning at the same time. Now, here on the side, right, you have the different time frames. The different time frames. and the scanner will have in different time frames different trade ideas, right? So it will depend of you really. All you can do is basically come here and explore the different time frames. All right. Now let's say, for example, I want to have a look at 15 minutes. Then I select M15, right? Then the next option is for you to choose a broker. All right. The scanner will have different brokers, okay, and different brokers will have different, not really different, but most of them will have the same currency pair scanned and everything. And all you have to do is just go through them, explore, and check the one that you think is better for you right now, which will come to the confirmations that we're going to go through, right? So what you do, you basically come here and just go through the brokers, right, and see what they have. For example, if I select FX choice, so it will show me the different currency pairs that FX choice scans, right, that the scanner has, the different opportunities in the 15 minutes time frame. And all you have to do is go through them. Okay, let me see GBP card, what they have. Awesome, they have this opportunity. Then they have AUD JPY. They have this one. So basically, you basically shuffling around and see and check the opportunities, and you decide which one you want to enter. And that's where the four confirmations come from, right? So once you choose your time frame, once you choose your broker and choose your currency pair, now it comes to the time that, like I said, the scanner does everything for you, right? But you shouldn't just jump to the gun like that. There's some confirmations that you can do, right? And you should, to give you the best probabilities, all right? To know if it's a really good time to enter that trade, because the scanner is already giving you the overall direction, all right? The overall direction. So all you have to do is really check if it's a good time to enter that trade right now at that time, right? And to do that, one of the confirmation is, right, you need to find the entry, right? The first one is find the entry. And you can find the entry by identifying where the letter D is, or where it simply says entry, right? And now let's see where's the entry, right? So for example, let me check this one, right? So for example, can we see where the entry is right here, right? Can we spot the letter D and where it says the entry, where it has written entry? If you can spot it, drop a number one. Fantastic, right? Everyone can spot where the entry is and where the letter D is, right? That's your entry. Now, by finding where your entry is, you will know what type of trade um, that trade idea is, if it's a buy or if it's a sell, right? Now let me go back to my list. Okay. Now that you found the entry will help you to know if it's a buy or sell. How? So if the entry is at the top, the scanner is telling you to sell that currency pair, right? If the entry is at the bottom, the scanner is telling you to buy. So by knowing where the entry is, you know what type of trade this is, a buy or sell. Fantastic. Now you know that. You know the entry. By knowing the entry, you know if it's a buy or sell. Now, in this case, right, here in the scanner, by knowing where the entry is, what type of trade do you guys think it is? Is it a buy or sell? Buy, right? It's a buy trade because the entry is at the bottom. Fantastic. Now let's go to the next one, right? Now, let me just close this here for a second and move to the side. Now, the second one, right? So that was the first one. The second one, you need to identify where the current price is. So the last candle represents the price. Now let's see where the last candle is. Blue, right? The blue one is the last candle. Is the most recent candle is this one, is the blue one, right? This is the most recent candle. So now we know the price currently is here. All right, we know that the price currently is here at 1.73792. That's where the price is, right? Now we know where the entry is. Now we know what type of trade this is. We need to identify where TP1 is located. All right, where TP1 is located. So the scanner will give you TP1, TP2, TP3. TP stands for take profit, which is where you would be taking basically your profits, collecting your profits, right? That's what TP stands for, take profit, right? Now, can you guys see where the take profit is? Now that we know where the TP1 is, right? TP1 is down here. TP1 is here. Okay, this is where TP1 is, right? Now we know where the entry is. We know what type of trade this is a buy. We know where the price is currently, and we know where the TP1 is. Okay, now the last confirmation is you basically need to ask yourself if the price is already close to, already touching TP1, it's not safe to enter that trade. And I'll tell you guys why. All right. But if the price is still far from TP1 or around the entry point, it's safer to enter that trade. All right. There's an extra confirmation here. I'll talk about it. Right. Don't worry about the number 5 right now. Let's focus into the 4 confirmations. Right. So we know the entry. We found the entry. By finding the entry, we know what type of trade it is, if it's a buy or sell. Second one, we did identify where the current price is. And the third one, we identify where the TP1 is located, right? And the fourth one, we need to see, okay, if the price is already close to already touching TP1, it's not good to enter. If it's still far away around the entry, it's safer to enter that trade. Now let's see what's happening. So by you guys looking at this, all right, let me change the color of this one. Let me make it yellow, right? So this is where the price is, this is where the TP1 is. Is the price still far away from TP1 or the price is very close to TP1? Still far, right? Fantastic. Now, like we say on the confirmation, if the price still far away from TP1, it's safer to enter that trade. But if it's very close to TP1, it's not safe. And I'll tell you guys why that is not good to enter when the price is already very close to TP1, already touching TP1. Okay. The reason why, guys, is all right. So if you watch your videos, you should know. I mean, you should like have heard and watched the video that talks about support and resistance, right? And the TP areas are support and resistance areas, all right? And support and resistance areas are areas where the price basically have trouble going past, right? Have basically resistance. The price most likely to go there and reverse, right? That's why you don't want to enter when the price is close to TP1 or even TP2 or even TP3, right? Because those are areas that most likely, right, the price will have a pullback or reverse completely, right? So that's why you don't want to enter around those areas. So you always want to enter far away from those areas, right? So you can catch the move up to those areas at least, all right? So, and you guys will notice most of the times that the price comes to TP1, there is a pullback, right? Or just a reverse completely. And I'll show you guys an example. Let me just delete this. Let me delete this here. Can you guys see where the price went? Can you guys see it? Say yes. Can you guys see where the price went? Went to TP1, and what happened? There was a pullback. It went down. So the reason why you don't want to enter when the price is already on TP1 or very close, because you don't want to get caught up in a retracement or the price changing direction completely. Okay, that's why you always want to enter when the price is still far away from TP1 or from any TPs, right? And you guys will see this happen so many times. The price goes to TP1 or TP2 and it just reverses, right? Let me show you guys another example. For example, here, right? The price went past the TP1, came to TP2, went back up. because these are areas of support and resistance, right? So you don't want to enter close to them already when the price is touching them, all right? So always enter when the price still is very far away from the TP1 or close to the entry point, okay? Is it making sense? These are the 4 confirmations that you want to make sure that you do before entering a trade, all right? Now, there's something that you guys can also use to help you guys to something that extra that you guys can use, right? There's something called currency strength meter, like I wrote here on the number 5. And currency strength meter is one of the websites that basically shows you the strength of the major currencies, but you shouldn't just trust it like by itself. You should use all these confirmations together, then come to a decision. Okay, tick, 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 tick. Fantastic. Let me take this trade. All right. Even though you have all the confirmations confirmed, doesn't mean that you will win that trade. Just to give you the best probability, like edge, right? Now, what the currency strength meter does, it shows you the strength of the currencies of the major, like euro, pound, dollar, Canadian, New Zealand, Swiss franc, Australian, Japanese yen, Norway NOK, Denmark NOK, right? It shows you the major currencies, and there's always going to be let's say trades related to this, to that have these pairs, right? And so more bars a currency has is basically telling you that currency right now is very strong, right? Less bars is showing that that currency is weak. For example, we can see Swiss franc, New Zealand, Australian dollar, Japanese yen right now, they're very weak, right? And we can see the euro, pound, US dollar, Canadian dollar, and Norway NOK, they're quite strong, okay? So if there is a trade that basically telling you to buy, so let's say for example, right? Let me just have a look at one example here to show you guys. Let me move it away. One example. For example, we have GBP card, right? So we've got GBP card. Right now on the currency strength, we can see that GBP, right, has 1, 2, 3, 4 bars. And the Canadian dollar has 1, 2, 3, 4, 5, 6 bars, right? So guys, which one is stronger right now? There's not much difference, but it counts a lot. Which one is stronger right now? The Canadian dollar or pounds? The Canadian dollar, right? So we can see that the Canadian dollar is much stronger right now. And make sure that you refresh this page, all right? As many times, like every 2 minutes or so, if you are here, refresh it and check it, all right? Because it will change, okay? So now we can see that the Canadian dollar is a little bit more stronger than pounds right now. And what's happening here? Even though the scan is telling us to buy, right? It's telling us to buy. If you see something like this, oh, let me just open it again. Let me open that window again. If you see that the currency pair that the scanner is telling you to buy is way weaker than the opposite one, then just wait, right? Then just wait, because what's going to happen, that currency doesn't have enough strength to push up yet, okay? Doesn't have enough strength to push up yet. So one thing about trading, timing, right? It's all about timing. If you enter the right time, you are good, okay? It's all about timing. Let me just open the website again. So we can see the Canadian dollar is 2 bar more strong, okay? Stronger than pounds. That's why we can see that the pound right now is coming down, right? It's coming down to the entry and everything. Even if the price was already on top of the entry, if I see that the currency pair that I'm trying to buy is weaker right now, I just wait a little bit and see what's happening. I just wait at least for the opposite one lose some strength, right? And the one that wants to buy to gain some. And that will give me a stronger confirmation to go ahead and buy that currency. because it's actually stronger than the one that I'm buying it against, which means it's supposed to go up. Okay, but of course, nothing in the market is certain. This confirmation is to help you to have the best probability. So use them together and don't just rely on one. Okay, is it making sense right now? So this is the currency strength meter. Come and check the strength, because most of the times, what you're going to see, you might enter a trade, right? All the confirmations aligned. Let's say, for example, you buy the currency pair, right? And you didn't check the currency strength, and because you didn't check it, actually the currency pair the basically like you're trying to buy is way weaker than the opposite one. So now you ask yourself, oh, what's going on? Why is it keep going down and not going up? Right? It's because that wasn't a good time to buy that currency yet, because the opposite one is way stronger. Okay, it doesn't mean that it will work all the time, but this is something that I've tested, and even the top educators I've seen some lives, they check it sometimes, they use it. Okay, so use it, combine it with the four confirmations, use it, combine it. Okay, just to give you that extra confirmation to be more certain and enter that trade, because the scanners already give you the direction that the trade is supposed to go. It's just for you to find the right time. All right. I hope it's making sense, guys. Let's talk about RSI. There's one thing that you can do with this indicator RSI, and that thing is called divergence, right? And divergence is one of the confirmations and one of the let's say things that you can spot anywhere. And if you spot it, it's a good sign, right? But you need to train your eyes. Even myself, I had to spend some time learning about it, because you need to train your eyes to see some stuff, right? Now, what is RSI, okay? And what is divergence? So divergence is, I actually picked it up here, right? Let me see if I can find it. I actually picked it up here. I hope you guys can see, right? So divergence in Forex trading is a situation, right? Is down here, right? So divergence in Forex trading is a situation where the price strikes higher highs or lower lows without the oscillator, which is the RSI, the indicator, doing the same, right? This is a major sign of possibility that the trend is touching its end, all right? And a reversal might be expected. So basically what this is saying, right? Divergence is whatever is happening here, right, on the chart, it should be happening here. But what's happened sometimes is that the complete opposite is happening. Whatever is happening here, the complete opposite is happening down here, right? That's what you call divergence. So it's a lie, right? And this indicator, RSI, which means relative strength index, it really shows you who's in the market right now at that moment, let's say. I like to see it that way. Who's in control right now? Is the buyer or the sellers, right? Now, let me just open one of the windows here. Okay, let me just track this. I hope everyone can see. Now, this should, forget about the rejection candle. Actually, I'll touch on it, all right? So you got divergence, right? And rejection candle. And divergence is when the RSI indicator going in the opposite direction than whatever is happening up there in the chart, right? So now, RSI, right? When the line is above the 70, the price is in an overbought area, right? When the price is above the 70 line, and you guys will see it here. And by the way, if you want to make it full screen, just tap twice. Come down to it and tap twice. You'll come full screen, right? If the price is above the 70 line, as you guys can see here, let me grab one of the tools. Let me, not this one, right? The 70 line. So this is a 70 line, right? So you guys can see number 70 down here, right? When the price is approaching the 70 line, already went past it, the price is on a overbought area, which means most likely the price, it's just a matter of time for the price starting to drop, right? It's just to give you an indication the price is in an area that is kind of overbought. So if something is appreciate too much, what happens after a while? It just drops. All right. And this indicator shows you where the price is right now. But it doesn't mean that the price will not go past the line and keep going up, right? Don't just rely on the price coming to the line and reversing. No. And as you guys can see, the line came to the 70 line, went past it, came down. In the past, went past it, came down. It's just to show you where the price is right now. The price is in the overbought area. So it's most likely just a matter of the time for the price start to coming down, right? So that's the 70 line. Now, when it comes to the 30 line, so when the price is below the 30, the price is in the oversold area, which means most likely the price is depreciated too much, most likely starting to go up, right? Let me go back to the Harmonic scanner. So the 30 line is down here. This is the 30 line, right? And you guys can see the number 30. Oh, let me just open it full. Number 30 here, right? So when the price comes to the line and already went past it, right? So you know, okay, the price is approaching already, or the price is already on an oversold area. So it's most likely that the price will, it's just a matter of time for the price to start reversing, right? And once more, it doesn't mean that the line will not go past the line. It will go, but it's just to give you an indication. As you guys can see in the past, complete went past, went back up, right? It will happen. But you basically like have already an idea where the price is and what can you expect next. All right. So this is what the arrow side does. It shows you really in terms of the price, what's happening and who is in the market. Okay. If the price is oversold or overbought. Now, how do you guys use it to find the divergence? So when I came to this, right, at the time when I entered the trade around here, when I came to this, I saw that the candles were going down, right? But up here, down here, the lines were going up. The price was going up. So it was doing the complete opposite, right? So what I did, right? So what you guys should do, just zoom out a little bit, right? All you guys do, right? So if a market is going down, it should be doing lower lows, right? So you guys are going to grab a trend line, right? A trend line here. Okay, select trend. Then you can change the color. I'll just make it black and a little bit thicker. Fantastic. Now, the market was doing lower lows, right? Fantastic. So all I do, I just connected the low points together, right? So the market's going down. But when I came here to the indicator, the opposite was happening, right? When I came here, so once more, you go to the trend line and you basically connect the dots, right? So what I could see that the market was doing complete opposite down here on the other side, right? Down here, okay, the market was supposed to be doing lower lows, but the market was doing higher lows because this high is higher than this one, this high is higher than the opposite one. And what you guys do, you guys use the trend line to see, all right, the direction. So down here, the line is going down. Down here, the line is going up. Just to give you that visual, let's say, confirmation, right? So you guys can see visually what's happening. Then what you guys can do next is actually come here to the side again and grab a vertical line. This is more advanced. If you don't understand, don't worry, come to the trainings and I'll show you where you guys can go and look further into the platform, right? Come to the lines here and grab the vertical line. When you click on the vertical line, what you want to do, you want to go at least, if it's a buy, go at least 2 low points previously. So I'll use this point here, right? I'll use this point here, and I'll also change the color, right, of the thing, and you can make it thicker so you can see properly, right? Now I know the reason why I'm putting this line here is just so I can know this candle here, where does it represent here on the line, right? Because in here is lines and here is candles. Now I want to see this candle, where does it really matches or represents here on the line. And all you do, you go again, grab the line and come down here and just make sure they're aligned. There you go. All right, now no, this candle here represents down here, basically. Okay, let me actually put it on this low here, this on here, right? So no, this candle here is represented here. Okay, now let me go and find the other low, right? Which is this one, the most recent one at that time. So all I did, I connected it. Again, that low with this low. Now I know this candle, this low here is represented here. So if I delete the line here, let me click it. If I delete it, and if I delete here too, so all I could have done is basically grab the trend line and connect those two lows together and come down here and do the same, right? There you go. All I need to do is connect them together. This low with that low, right? Now you guys can see down here is going down, right? But down here is going slightly up, right? That's how you can spot divergence. Down here, right up here, and down here, there's completely two things happening, right? That's why I was able to see, and at that time, the price was close to the entry, right? Far away from TP1. I know it was a buy, and I saw divergence. So I was able to enter that trade and catch the move to TP1. So divergence is something that if you spot it, right, it's really good. Okay, it's a big, big confirmation. So you need to train your eyes to see what's really happening. Okay, and the way that you do that, you use the lines so you know and match the candle with the line to know which candle represents what, and just connect them. And you use the trend line to see if it's going up, upwards, or downwards. If you're doing the opposite, then you know there's divergence here. So in this case, I knew, right, even though the candles are going down and the line here is going up, I knew that there was no sellers here, right? The buyers were the one about to enter the market. Okay, so there was divergence. The chart is telling me there's just sellers, right? Sellers are selling the market. But the indicator is telling me no, actually the buyers are the one coming through and they're going to push the market up, right? So that's why I spotted the divergence and decided to enter that trade and catch the move. All right, guys, divergence give you guys an idea of change of momentum, change of direction. Who is in the market, if it's the buyers or the sellers, okay? If you can spot it, it's really great, all right? Now, there's something called rejection candle. There's different names that educators use, are just simple, rejection candle, right? And the rejection candle is good to spot it when it's close to the entry area. And I'll give you guys an example. This is something that you guys will see all the time, right? This is an example of one, right? And it's good to see from the entry point. As you guys can see this candle here, we have a little bit of time. If you don't understand it right now, don't worry. Next training, I'll show you guys more stuff, okay? Let me use the rectangle. For example, this candle here. Let me highlight it. Let me make it yellow for you guys to see. So this red candle here, right? This candle was fully red till this bit here, right? But before the time finished, the buyers came up and pushed the price up a little bit, right? So the price came around the entry point and the buyers said, no, we don't want the price to go further down. We're going to push the price up a little bit. And what they did, they pushed the price up. And when the candle is full, and if the candle losing power, you will see these wicks behind, right? You will learn it from through the academy, through the basic videos. You see these wicks behind, okay? And all you do, right? If you spot this and you spot divergence, and you have all the confirmations together, guys, go ahead and use the right risk management and jump in on that trade, okay? And jumping on that trade because these are strong. So rejection candle, something like this. I'll give an example. Look, this is a rejection candle. A rejection candle when one side is in control, but before the time finished, the opposite side came in and pushed the price and basically took control. Okay, and look, this candle was fully red all the way up. Before the time finished, the buyers came in and pushed the, I mean, the sellers, sorry, was fully blue. But before the time finished, the sellers came in and pushed the price down, right? It rejected, okay? It's called rejection. So they're not allowing the price to go further. And before the time finished, they push it down, right? So if you see rejection candle from the entry areas and you see divergence, okay? Go ahead, all the confirmations match, go ahead and enter that trade. If you don't understand it right now, don't worry. I'll show you educators that you guys can watch and go and learn more about divergence, okay? And in every training, we'll talk about it. So after all of this, now it's time for you to enter that trade. But before entering that trade, you need to make sure that you're using the right risk management, okay? Risk management, guys, is what's going to protect you, all right? Risk management is what's going to protect you. So always use the lot size appropriate for your count size, okay? Use the lot size appropriate for your count size, right? So there's a, in the wealthier world and even the educators say 0.01 per each 100 in your count, right? So if you have 100 pounds, you know, in that count, the lot size that you should be using is 0.01, right? So in that way, you never blow your count, let's say, right? If you trade in normal currency pairs, of course, because gold and things are different, right? So 0.01 per each 100. If you have 200, you know maximum on that count, you should be using 0.02. And so, 300, 0.03. In that way, you never, even if you lose a trade or two, you never blow your count. Risk management, guys, is here to protect you. So use it. Use it accordingly to your lot size. And guys, trust me, when I tell you guys risk management is a grave for new traders and traders overall, trust me, I've been through it. All the mistakes about trading, I went through it, okay, guys? And I'm telling you, risk management is where people fail massively. So here in the wealthier world, we want to make sure that everyone understands from the jump risk management is very important, okay? If you don't have the template about the risk management 0.01 per each 100, reach out to your mentor, ask her more about it and how can you do it better, right? But risk management, okay? After all this, all of this doesn't make sense if you enter that trade and don't use the right risk management, okay? Risk management is what's going to protect you. Protect yourself first, always. You can't control the market, but everything that you do in terms of how you approach the market is on yourself, all right? Now, let me just show you guys a tool that you guys can use to help you guys with your risk management, just quickly, okay? Actually, every product, every add-on that the platform has, there's actually a calculator. Calculator on the Harmonic scanner is here on the top right, right? And if you click it, it actually show you, it will help you calculate, okay, the right lot size to use on that trade, all right? So, so what you do, so let's say that you want to enter the coordinates that are here, right? So it will ask you, okay, how much do you want to risk on that trade? Now, you as a trader, okay, you should be risking 2 to 3% max of your capital, okay? 2 to 3% max of your capital, guys, right? Because risk management is what protects you. Now, to find how much the percentage of your account, you can basically just go into your calculator. Let's say that you have, let me pull up the calculator here. For example, I have 500, maybe 500. Let's say I have 200 on my trading account, right? I'm not good in maths, guys, but percentage is something that I never pay attention to until trading. Trading will make you think percentage-wise, all right? Think percentage-wise when it comes to trading, right? if you guys notice, the banks always talk about percentage, 0 percentage, something, 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 right? If I want to know how much is 3% of my account, all I do is, for example, if I have 200, okay, I'll do like 200 divided by 100 to find 1%, okay? 1% of my 200 is £2, right? Now, it will depend of, so let's say that you want to raise 3% of your account. So all you have to do, then you will time, because you already know how much is 1%. Then you will time it by the number of percentage that you want to raise on your account. So I'll time it by 3, right? Then it will tell me, okay, £6, right, is 3% of my 200 is £6, right? Now that I know that, now I know I want to risk 3% of my 200. I know that 3% of my 200 is £6. Okay, I want to risk £6, right? And the currency pair, for example, is GBP cards. So you put the currency that you have in a look at. So I'm having a look at GBP cards, and the entry price is, so use the entry price that is there on the scanner, for example, is 1.17205, right? That's the entry point. And the stop loss, put the stop loss that you want to place, all right? But I'm just using the scanner coordinate, 1.16, right? 888. That's my stop loss. And now if you click calculate, right, it will tell you this is the lot size, right, that you should be using on that trade, right? This is the lot size that you should be using on that trade, right? So you know already, if you lose that trade, you're losing £6, and that's 3% of your account, right? But if you win that trade, you at least win. If you're using the on next training, I'll go through the risk to reward. All right, the risk to reward tool, how to use it, how to know how to use the best risk to reward. But this is just to show you, you can use the calculator, put the amount by the percentage of your account, 3% or 2%, okay, below or anything like that. Then you just put the stop loss, the entry stop loss, and calculate, and it will tell you what loss size you should be using in that trade to lose 3% of your account if it doesn't go in your direction. Okay, does it make sense, guys? Drop a number 1 if it's making sense. We went over a little bit. Save your questions, okay? Save your questions, guys. But I just went over a little bit more advanced today in terms of the RSI and rejection candle. But risk management, guys, is standard. Follow the risk management. Use a calculator. Work out the percentage of how much is 3% of your account. Put the number here in terms of money. Calculate it. You know what loss size should be used in that trade. Overall, you're risking 3% of your account always. Okay, guys, we'll end up. So we'll end this training.